Good morning, everybody. Thanks for joining me this morning. As I do every morning, I'll give you my pre-market analysis and strategy session on what I'm looking at and what could potentially happen in the markets. So I'm going to talk about my trades that I entered yesterday because I was extremely bullish, but I did secure profit using some stop losses. But first, overnight, the Bank of Norway increased their interest rate 50 basis points in a surprise move. The Bank of England countered that move by raising their interest rates, and now their interest rates are sitting at 5%. Understand, as interest rates go up, it puts downward pressure on the market. As interest rates go up, it makes things more expensive. It makes borrowing money from banks for small business more expensive. It makes loans and the fact that a number of public companies are carrying debt and will need to refinance that debt at a higher interest rate. So that takes away from their profits and the money that they will earn, bringing down earnings per share. So again, as interest rates go up, you have to understand the downward pressure on the market. Now, what can change? Now, as interest rates are going up and things are still expensive, you have demand destruction, meaning things are getting more expensive. People say to themselves, okay, I can't afford to go out to dinner. I can't afford that vacation trip. I can't afford such an expensive car. As people spend less on these everyday items that we need, the pricing goes down. As the demand goes down and the supply remains the same, the pricing will go down. So that's specifically how interest rates will affect your daily life, but how they play out on today's market. Okay, with that said, I'm going to talk about my trades that I made yesterday because I was sitting in 6 or 5 bullish positions. And again, remember, I was the bear who's not going to trade with emotion. I'm just going to trade following the market's trajectory and momentum. So I'm going to talk about a bunch of my trades. The first one I'll talk about is Apple. I saw some big moves on Apple. I was in just 2 contracts, Apple calls that expired Friday. I got in at 183 and change. I wrote it up a full $1.50 before I exited out. Now, why did I exit out? Now, here's where the strategy comes in. For me to hold Apple longer, I have to think the market's going to be bought up and continuously be bought up Thursday and Friday, Wednesday afternoon. It's just going to push higher, and there has to be reasoning for me to push higher. Like there's value in the market. Like there's value in Apple. Like Apple should be a $200 stock. Now, let's remember, Apple received a couple of downgrades. Now, just because they became downgrades, meaning they went from buy to hold, not from buy to sell, which would be a double downgrade. The same was said with Tesla. Now, I didn't trade Tesla yesterday, but Tesla received a downgrade. One of the banks came out and they increased their price target from $200 to $250, but downgraded Tesla from a buy to a hold. Again, it's a downgrade, even though there is a price target increase. Okay, so back to my trades. My second trade, and these are in no specific order, was Marathon Digital. Why was I involved in Marathon Digital? Because I mentioned all of these institutions, Fidelity, Citadel, Deutsche Bank, BlackRock, all want to create Bitcoin ETFs. Now, if they're creating Bitcoin ETFs, there's going to be a demand for Bitcoin, pushing the Bitcoin price up. Now, we saw Bitcoin crack 30,000. I happen to think Bitcoin's on its way to 33 or 34,000. Some of these stocks react 2x, meaning if Bitcoin goes up 10%, the stocks will go up 2 times that, meaning 20%. So whereas you had Bitcoin at 25,000 going to 30,000, an increase of 20%, you've seen stocks like Mara, Riot, not necessarily Coinbase because we know about their struggles, but they have gone up over 20%. So they're outpacing Bitcoin. So again, if you expect Bitcoin to run to 33 or 34,000, another 10%, you can expect stocks like Mara and Riot to push up anywhere from 10 to 20%, from 1x to 2x. So my marathon trade, again, just in case Bitcoin ran, I bought out till next Friday, okay? With that said, I did exit. I was in at $1.30. It went down to $1.22. I bought 4 more contracts. So I was in for 8 contracts at $1.26 each. I sold for $1.70 each, implying about a $46 profit per contract. When you do the math, that's about a 36% return. Okay, that's the reason I got out of that. Now let's talk about some other plays that I stuck with, okay? Affirm Technologies. Affirm, I was looking for a spike past 16, possibly to 17, possibly a short squeeze. Wasn't happening in yesterday's market. So whereas my average ended up being about 51 cents, These options went down to $17, $16 a contract. I ended up increasing my position, doubling my position at $20 a contract, making my average cost 35 and a half cents or $35.50 each. When we got the spike, it went to $30, then 32, then 33, then 35, then 40, then 41. At that time, at 2:30, I was thinking, shit, I should really unload these. Let's remember, I was down 45% entering the day. Now I'm positive over 12%. Good time to exit anytime you're green. With that said, I used a stop loss in place. I didn't get $42. I ended up getting $35, which was slightly under what I paid. So I took a minimal loss on that. Let's understand those Affirm options closed at $23 a contract, and I'm sure Affirm is probably down 1% pre-market. Another play that I made yesterday was SoFi. Now, I like SoFi, and I'm still holding this play. SoFi was $8.38, $8.40. I decided that I'm just looking for some inflow in SoFi, and I believe it can go up to $9. In this tough market that we saw yesterday, it would have been tough to do yesterday. But again, SoFi rallied from $8.38 to $8.75. I used my stop loss on the way down, probably $8 and about 67 cents. I definitely did not get max profit, but I secured some decent profit on that. NEO was popping yesterday morning. China came out and they said they're putting aside $86 billion for electric vehicles and the like. Now, understanding NEO was following Tesla, and as Tesla was giving up its gains yesterday, and then Tesla was opening up probably down 3% this morning. I expect downward pressure on Lee, Xpeng, NEO. I'm still holding that. Again, those were the $9 calls. And I bought them when NEO was $9.05, 6 cents, something like that, all the way up to 8 cents. I paid $29 per contract. I think they closed at 23. They were as low as 22, then they popped up to 32. I thought about buying more at 22, but again, it was a risky trade, and I'm not that heavily invested in NEO, so I decided just to let my position carry forth. Didn't sell, didn't take profit at 10% because I was looking for a larger spike. And again, right now, this morning with NEO opening at probably like $23, $22 per contract, I will likely be down about $7 per contract, 10 contracts, $70. But it's not the amount of money, it's the percentage. So we're talking about 25%. I will not average down on those. Again, I will look for NEO to pop. If I get a pop from $9 to $9.30, something to that extent, it'll give me an exit time and a time to get out. So we got NEO, we got the Affirm. Okay, so I spoke about the Affirm. When Affirm, basically doubled. What I like to do is when I find a low point on an option, whether it's puts or calls, and the low on the day was, let's just say, $60 a contract, I say to myself, okay, a good move would be for that contract to double. So from $60 a contract to $120 a contract. Now, if I was in at $90 a contract, it doesn't change my exit strategy. If the low is 60 and I like to double the low to get my exit strategy being $1.20, just because I was in at 90 or 95 or 86, it doesn't mean I'm looking for $1.50, $1.60. I'm looking for that $120 per contract. And again, when I come up with a mathematical equation that makes sense for me, I tend not to nibble. I tend to just to put in my ask, sell it when it hits that, and be happy. Again, if you're green on any type of your trades, it's okay to secure profit. With that said, I can talk about two stocks that I believe have demand going forward. One of them is Starbucks. I've been talking about that for a couple of days. That's more of a Dow play. Again, Starbucks, you can find them in line with airlines, energy, Dow components like that, casinos. The reason I'm in Starbucks is because, again, I saw some buying at $97, $98. Now Starbucks is $102. I know it has the potential to run up to $107, $109 if the markets recover and the markets are strong. With the markets being as they are, again, let me just see if I can show you the Starbucks chart. Okay, so we got the 1 month chart on Starbucks. What can you see? Around 613, we kind of bottomed. You've had some buying since then. $97. Again, we're up to 101.87. The high yesterday was 102.50. The low yesterday was 100.36. So would it surprise me if Starbucks has a pullback today? If it does pull back, I would look for it to pull back to yesterday's low, around $100.50. If that happens, I will get involved with Starbucks yet again. Similar to Starbucks, we had Love made a comment about Boeing. I think it was a day and a half ago. Institutions were selling the $215 puts, selling the $215 puts, claiming premium on that, and they were buying the $215 calls. So when you see something like that, and it happens where the stock goes in the opposite direction, meaning they're bullish Boeing. Boeing signed a nice contract, and then we look at the stock and we'll look at the chart. Let me just pull it up for everybody. Okay, here's the 1 month chart. So you got outflow, outflow, outflow for the last 5 days. Inflow yesterday, and again, yesterday Boeing went down 30 cents, was as low as 209.39 before closing at $212. So when you look at it on a smaller level, and we'll just look at yesterday's flow, let me just bring that up. Okay. You're looking at yesterday's flow. You're seeing the dip in the morning down to the 209 level. Now, Boeing tends to move a little more than $3 per day. So the fact that, it's sitting at 206 this morning, I happen to think Boeing will get bought up. Now, understand, Boeing contributes. You take the movement in Boeing, which this morning is a $6 move down from 212 to 206. And understand, they entered these call contracts and sold the puts when Boeing was 209. So the fact that Boeing closed at $212, you're like, okay, well, the people that bought the calls and sold the puts, they're already green. For me to get in, it would be silly to chase. However, when I see Boeing pull back 6 points to 205.81, assuming it opens up 205.81, let's say 206, you can see a quick drop back to the 204.80 range, the 204.90 range. So I will have my strategy prepared that if I get a pullback of another dollar this morning and Boeing opens up down 3.5%, and it's only down 3% to start, so like another dollar or two, that makes sense for me to enter having a longer term strategy. Again, they were buying, I think it was the July, it might have been the August, they were buying the 215s and selling the 215 puts. They're banking premium, assuming that Boeing will be over $215. I don't know what the premiums were, but if you do the math, they probably even need Boeing to maybe be 215 flat given the next month, which would still imply a 4.5% movement. However, Boeing could easily go back. Let's just look at the 1 month chart, and we were in the 222 range for a long time. And if we are seeing consolidation now and Boeing decides to get bought up for 2 out of 3 days, you could easily see Boeing back at the 221 range, which would be a 9-point move, which would be 4.5%, which would be a great time to exit. So again, 2 companies that I do see some inflow in would be Starbucks, would be Boeing. I mentioned Mara, Riot. I'll stay away from Coinbase. Coinbase is a little too volatile for me. Interesting, you had Kathy from ARK selling her Tesla shares last week. Tesla then popped another $15, and she was buying Meta shares. So Meta had some strong support, but I'm assuming she probably went all in already, and I'm not sure how much more support she has on Meta, so we can check out Meta. Again, outflow starting on Friday, which is what I mentioned, liquidity being pulled out from the market. All right, so with that said, let's head over to Discord real quick and let's look at the top flows so we know what I might be trading today. Again, this is my entry into Marathon Digital. Bought them for $130 each. They went down to $122. They spiked up to $180. I had my stop loss at $170, so I was able to secure some decent profit. Same with Apple, SoFi. Again, I was looking to re-enter before close. I'll be looking to re-enter this one this morning and Mara this morning. Neo, I'm still holding on for, and Affirm, I explained that I was in at $51 a contract. It went down to $17 a contract yesterday. I added more at $20 a contract. When I got the spike to $40 and $41 a contract later in the day, around 2:30, thought about selling, didn't sell, used a stop loss at $35 a contract, which is my new average, ended up hitting $35 and going under that. So thank goodness for my stop loss on that one. I got out even. I really thought I was going to crush it with that trade. Okay, but what are we doing? We're going to go to the flow and algos room, and let's pull that up, and let's go down, and let's look at the top flow from yesterday, because that is the most interesting to me. Top flow, I bet we'll see a little Tesla on one side. Come on, let's pull it up. Of course, it's going to take time. Okay, here we go. So what do we see in the bearish position? The Qs, which is big technology, Microsoft, Apple, Tesla's up there. So Tesla, again, we saw outflow. It's off 3% this morning. So as we closed yesterday at 3:50 p.m., you're going to see the same charts on these. So you can see, okay, well, what's likely to gap down? Okay, well, maybe this, maybe Apple, maybe the Russell car is an energy stock. What's likely to maybe move higher? Okay, what am I seeing here? I'm seeing Microsoft, which came off its all-time highs. Anytime stocks hit all-time highs, they generally continue higher in the next 2 to 4 months. So again, I can understand why they might be bullish Microsoft. NVIDIA, why? Because a lot of people have price targets on NVIDIA of 500. So as it's at, what did NVIDIA close at yesterday? What, 4? I don't even want to guess. Let's find NVIDIA. Oh, I got one more interesting point. And again, I have no position in this penny stock. All right, NVIDIA closed at 430. I was going to guess 426. Its high yesterday was 436. Its low was 420. So you're understanding a 16-point range, a 4% move on NVIDIA from the top to the bottom. But again, what's going to surprise me? I happen to think NVIDIA is probably on its way, continuing up. They're buying NVIDIA. They're buying AMD. They might exit out of Palantir. They might exit out of AI, which is CAI. Again, you want to be with the industry leaders if you want to be bullish. If you want to be bearish and buy some puts, you want to go with the more spec plays. Spec plays being AI. Spec plays being Palantir. All right, so with that said, we got those two out of the way. Here's the interesting point. Nikola. Everybody remember that Nikola electric vehicle company? What were they, Australian or something like that, New Zealand? Anyway, they're being bought up past couple of days. However, if you look at the July 21st open contracts for the put side, okay, and when I look at both sides, put and calls, but when I look at the put side open contracts for July 21st, which is next month, there are open interest 308,000 put contracts, okay, that are currently worth $4 or $5 each with a 50-cent strike. So Nikola's at $1.44 where it closed at yesterday, and a shit ton of people happen to think it's going to be under 50 cents each, which would be a sale of about 70% from which current price target. So there are penny stocks I would be skeptical about, and I would probably stay away from penny stocks like Nikola. All right, so with that said, let's talk about some other stocks, and we'll talk about the SPY and SPY ranges today. Let's just look at the dark pool level, TRDP levels for SPY. Okay, let's blow it up right here, and we'll see the SPY closed right at 434.94. So we find the closest level, 434.21, 436.97. So you're about 437. So if I'm looking for the SPY to be bought up this morning from where it is, probably around 434 flat pre-market, off what? 434.10. So it's got to be off what? 0.20%. Again, overnight it was off as much as 0.45%. So I understand if the market turns bearish or remains bearish or gets some bearish activity, when I see the SPY right now at 434, I'm saying to myself, okay, well, let's look at the dark pool levels, because I happen to think 433 and change could be in play on the downside on the bottom. So I say to myself, okay, well, 428.67, largest dark pool area. Not sure we're going to hit that. 431.44. Again, we found support yesterday at 433, 434, bounced directly higher to 435, and we even went all the way up to 436, almost 437 before pulling back at 230. So I'm going to say, okay, on the downside, I really want to focus on this 434.21 level, and then I go plus or minus 20 cents. So I'm really, again, for the third day in a row, going to focus on 434. If we break 434, then I do believe we'll see 432. Again, you want to be bullish or bearish, it doesn't matter to me. Have a trading strategy. My trading strategies, or one of them, is saying if we break under 434, meaning I see 433.74, and we don't bounce strong off that. Every time we've hit the bottom, we've had a nice bounce higher. We'll see 434, then all of a sudden we're at 435 and you missed your opportunity. So I'm watching 434 slightly there under. If we meander, if we hover in that area and it doesn't spike back up to 435, then I say, okay, downward pressure could win out. Interest rates are going out. They're selling big tech. If we see further downside, so I see 433.77, and then I say to myself, okay, we're going to see something with a 432 and change in front of it. If I know that, and I'm in calls, and I think we're going down a whole another 1.5 on the SPY, which would be what? About 0.35%, 0.4%. There's no reason to ride any calls or bullish trades under. What would I do? I would sell. I might even take a loss, knowing that I plan to re-enter when I see us find support, whether it's at 433, 432.77. Okay, that's your bear case scenario. Your bull case scenario is market continues to buy up the dips. All right. Every dip that we see, whether it's NVIDIA, AMD, again, you want to look at best in class. I'm not a supporter of Apple, nor was I a supporter of Google. In fact, I was a Google bear heading into this week saying Google could touch 121. What did Google touch yesterday? It touched 120 and change. Does that mean that it's going to bounce higher or drop more? Again, I saw some major buying in that level, which told me my exit strategy, if I see Google at 121, that's good enough for me because I think Google will have support. Again, there are institutions, hedge funds, holding companies that must remain bullish. Okay, with that said, let's talk about the short interest in the market real quick. Your bull case scenario is we drop to the 430, 433.50 range, okay? Then we go up about 3.5 points, so you'd be about 437 on the high side. Again, you really want to pay attention to where volume spikes and where you see support. The last 2 days in the market, Tuesday and Wednesday, we had SPY volume between 64 and 74 million, light trading day. On Tuesday, we saw a 3.25 point move from the bottom end of the range to the top end of the range. And we saw something yesterday a little under 3 points. So understand, if I'm just going to base it on history without knowing anything about today's market activity, I'm going to say, okay, SPY volume about 70 to 74 million. 3-point range, meaning if I see the top end and the market rejects 437, then I know we're going to 434. If I see the bottom end at 433.20 and I see strong support there and we bounce higher and we go 433.20, now we're back at 434. As long as I say to myself, okay, 433.20 is the low side, 3 points higher would be 436.20. So even if we're sitting at 434 and change, and I say, okay, we're going higher to 436, there's opportunity for me to get into a trade and out of a trade. Again, I already explained my strategy. I like to look at the bottom of an option, and I could use, let me just find one. Give you an example. Bought some DraftKings yesterday as well. Totally had my profit and then took away my profit. Let me just see what I'm up. I'm up still 39% on that. So with that said, what I like to do is I'll take something like, hopefully you guys can see that, a DraftKings, right? Then I will look at the bottom end of the range, which you could see right around there. And I'll find the price there and I'll say, okay, the price of this option at that range was $36 per contract. So let me double that. All right. So I double that. I see that it closed at 64. But if I go to the high side, then you can see, hopefully you guys can see that. I'm bending my arm. Oh, 78 cents. There you go. So I showed you the bottom side was 36. If I double 36, which doubling the low, I come up with 72. 72 would be my exit strategy. The fact that I just showed you that it went to $78, you know my exit strategy. It doesn't matter if I'm in at $46 a contract, which is my entry, whereas where I got in yesterday. Let's say I got in worse than that. Let's say I got in at $60 a contract, and I still noticed that the bottom of the contract was 36. I still double that, and I say, okay, my exit should be around 72. Who cares that I'm in at 60? If my exit's 72, that's still 20%. Again, that's how I kind of figure out that. Could do the same with Mara, looking at the bottom sign. The bottom, we closed at 109 on those call contracts. I don't own them anymore, but I'm definitely going to look to re-enter this morning. So when I go back, I'm going to look to re-enter possibly anywhere from 77 cents all the way up to 84 cents. If it doesn't contract and give me $77 to $84 on that contract, meaning 25% down to start the day, then I will not get involved with that contract. Again, part of my strategy. If I can't get the proper entry point, then there's no need for me to force a trade. Getting in at $1.09 when I think it has the potential to drop down to $80 a contract. Well, if I'm correct and I get in at $1.09 and it drops down to, let's say, $85 a contract, that's $24 that I'm off. That would be like 22%. There's no reason to have the anxiety or the FOMO to jump into a contract when you could start off the contract down 22, 24%. A lot of people, when they're down 20%, sell their contracts. So why are you getting into a play only to get stop lost out of a play? So again, on my watch list, I've got DraftKings, Mara. I'm still holding the Neo. However, I'm not as enthusiastic about that. I really like the SoFi play. Again, I'm just looking at the movement on SoFi, and I really think that these $8 calls, I might be able to get over $1, seeing SoFi at $9 in the next week and a half. So we'll see how that plays out. Thank you for joining me this morning. If you like what I said, please make a comment. If not, Join us on Discord, and I'll see everybody tomorrow morning for